What's going on, everyone? Another episode of Midwest Multifamily with Mohit Chopra today. Welcome to the show. Appreciate you making time.
Thank you, Kevin. Nice to being here. Appreciate you
Uh,
joining.
Certainly. Well, I'd like to just kind of jump right in with, how you got started in real estate, what kind of that story looks like, and where you guys are at currently.
Right. So I think, like most of our the investors that I've interacted with, I would say more than 95% have started similarly, starting with single family. And again, the purpose was to redeploy and maybe diversify some of the investment strategies. So that's how I started. And then I realized the potential in terms of generating cash flow and also not just diversifying from assets perspective because I only had invested in stocks until that time. But then I quickly realized like the actual gains that I was getting on that side, apart from the gains, I was getting some tax benefits as well. So I started investing more and more and then started learning more about how I can expand the portfolio. So started looking into those options. For the first 2 years, I still invested in single family, and then I came to know about multifamily. So in 2021 or so, started looking into educating myself. Went joined a couple of groups. I think I know we are part of a couple of groups together as well. So met a lot of good people there, including likes yourself. Came to partner up with few as well, and started investing in multifamily first as a passive investor, and now we're doing both JV deals and syndications across Midwest and Sun Belt as well.
That's awesome. What does, I guess, kind of the portfolio look like now with the different partnerships that you've got going on?
Yeah, so I keep harping on the word diversification, and that's exactly my portfolio still does as well, like both from perspective of location and the type of assets that we have. And it kind of driven by the location to a certain degree as well. For example, Midwest is purely our cash flow assets that we own, and most of these are JV deals. I do have some syndication in one of the larger as a LP as well, but um, and then we also have in the Sun Belt, it's less of a cash flow, more of an appreciation play there. But we are getting good returns on the back end. And we've seen a lot more appreciation in the last 2, 3 years, as we have all seen across the entire US to a certain degree, but not so much in the Midwest. Like Midwest is more about cash flow, running your operations in a close knit, right? Like being on top of things in terms of your cost factors. So that's where we are. So it's almost like I would say 50-50 in terms of where maybe 60% of our portfolio is in Midwest actually. Because we still are able, like last three deals that we closed are actually in Midwest also. So I think we're trying to balance that out, both from a cash flow perspective and appreciation play.
Yeah, absolutely. I'm curious. A lot of people, you already hit on it a little bit, but you start with the single families, and scaling up to the larger multifamilies can be a little bit intimidating at first. So I know you mentioned starting as an LP and then working towards the GP side. So I'm curious how that experience was. Would you recommend that to someone starting out? Were there benefits that you got out of it? Maybe hit on some of those points.
Oh, absolutely. I think there are two different aspects that I would say certainly were the reason, and I would say that's certainly a good way to start for people who are trying to delve into multifamily, of how to start. Like one, reasons to start with as an LP is one, you get to understand how the operations work, right? With all the communications that you get from GP in terms of the work that's been done, in terms of updates, in terms of communication, you get to learn from that aspect. And second, but more important, I wouldn't say more importantly, but equally important is the fact that you don't know there is a little bit of complexity involved in terms of operations of a multifamily versus single family. And yes, we got to learn a lot in terms of the different uh, programs that we were in, like in the masterminds that we were in. We were working with our investors. We learned a lot from those communication, but also more importantly, as an LP, you get to see from operations side what are the challenges that might come up as well. And again, every deal is different, so I'm not saying that you're going to learn everything from one or two deals as an LP, but you get to understand how the LGP responds to different situations, right? So I think people underestimate to a certain degree the amount of work that goes in as a general partner as well. Going in, they will just assume like, oh, instead of 2 units, I'm directly getting into be a partner of 100 units. But there are other aspects in terms of the work, in terms of different kind of issues that might come up, that takes a different level of management experience and different level of tactics as well to evolve as well. So yeah, I think from a learning perspective, that's certainly the reason I would say starting out as an LP is certainly a good way, and you build relationships, and also you learn in terms of how the GP operates as well.
Certainly. Yeah. I'm curious what, some of the things that you looked for as an LP in the GP team when you were first looking to place that initial investment, and then what you kind of learned to maybe, hey, this is how I want to be as a GP, and maybe these are some of the things I don't want to do, and or I could do better. Is there anything that stands out there for you in your experience?
Right, and that's a great point, Kevin. And yes, and I think that's where I would say I wish I would have learned more in terms of what to look for GP when I started out. So based on my experience now with the two, actually three deals as a LP, I would say the first thing I always now look for is their background, right? Like in terms of, I'm not saying that every GP as a partner in the deal has to be like a 20 plus year experience. No, what I'm asking is like, what is their background has been, and how does that help in terms of what they bring to the table as a GP partner? So yes, we have different responsibilities within GP team as well. You have team that has found the deal. You have team that is part of the asset management. And I think the most important for an investor is to understand who is leading the investor relations, who's leading the asset management, right? And what their experience has been in terms of those areas as well. Um, so that's one thing I look at. What is their experience has been in those areas? Now, there have been, and I have as part of one of the deal where the asset manager actually had only a couple of or maybe 1 year experience when he joined in, but he had 20 plus years experience in portfolio project management in a large, uh, I don't know if it's pharma or some other like large multinational company. So that kind of skills translates really well in terms of how they are able to manage their responsibility in the multifamily space. So what I'm saying again is look closely in terms of what they bring to the table, in terms of their experience, their education, what groups they are a part of, what masterminds they're part of. Are uh, they have done some due diligence in terms of their own investments, right? Like they have done investment themselves. They're part of, and they've invested into their own education and similarly part of different masterminds so where they can when they run into issues. Similarly, like when we have a couple of our GP deals where we ran into everybody runs into some issues, right? When we run into issues, we always have 100 plus people of good connections between different masterminds that we can run into or run our thoughts with and also get some great feedback because they have gone through those experiences and we can learn from other people's experience from that perspective, right? And that's the great thing about these masterminds because you build those relationships to be able to leverage from other people's experience and mistakes, right?
Absolutely.
So those are the two things I would say I would look into, like what are the different GP partners for the asset management investor relationship, and their past experiences and how that translates into multifamily space.
Yeah, most certainly. And I think I'm going to assume that some of these aspects, groups, the network, kind of aided in this. But I believe you guys recently were in due diligence on a deal and actually found, hey, this isn't going to pencil out anymore. And I'm curious, maybe elaborate on that experience more. That's always a tough thing to do, is to back out on due diligence. But how important was the network and bouncing, the deal off of other people, or in, even internally to the team, to make that decision?
Yeah, good question. I'm glad you asked this question. It's almost like corroding on my a little bit of wounded spot here, but yeah, it's certainly so we had a great opportunity in downtown Columbus. We looked at the asset. We were under contract for that. I actually had 2 plus months of prior pre due diligence done on that. Um, what we found later on the financials and the actual documentation when we started doing actual due diligence, because that's when we got the actual financials and numbers on the property. There were two aspects that came out. One, what they had actually told us in terms of actual occupancy was not correct. The actual occupancy was lower. What we found out, the rents collected were a little lower than what was projected. And then when we looked more into the market, the pro forma rents were not as high, and then we'd run into higher risk of higher, and they were already under high vacancy rates anyway. So there were, and there were a couple of other financials that were not accurate. Now, at that point, we had already spent a month and a half. Actually, I spent 2+ months of my own time and money into due diligence. We had spent money on inspections. We have spent time. We traveled there 3 times to walk through the property, walk through the assets, talk to the property management companies, talk to the general contractors in terms of some of the work that was required on the exteriors. So we were really dealt like as if we were owning the asset to a certain degree. So at that time, it was really hard to make that decision. Again, we didn't just walk away. We gave them an alternate offer, like based on our numbers now, what we see, this is what we can offer you. And we asked for quite a hefty reduction. The seller didn't agree to that, and that's why we had to walk away. Now, what I would say is again, these are the kind of thing that you want to look at in terms of GP, and I was glad that we were able to partner up with great folks, uh, part of the masterminds, like including Massive Capital and Kent and Rick as well from these masterminds, that we had a sounding board so that it didn't seem like one person is making that decision. It seemed like a sounding board of 3 or 4 individuals that were coming together with great experience that, yes, these numbers don't make sense and this is what we should counter offer at, right? So all these different steps need you to have right partners that have gone through those experiences and have other assets as well that can corroborate some of these numbers. Um, so that's where the story ended. Yeah, but it's a great experience. Like we learned, we had to build. We still have a good team in terms of collaboration that we're looking into that Columbus market still. So hopefully, we'll have this, we'll have next opportunity that will work out.
Certainly. And I think that the reason I kind of wanted to bring that up is I think from, an investor's standpoint as a, operator ourselves, but also looking to place some LP capital like that speaks really important value within, hey, they had this deal, they had time, money invested. There's other investors, plenty of other syndicators out there that would have forced that deal knowing that they've got money tied up in it. And you guys, protected the limited partners by making that decision to first counter offer, try and work with the seller, and then ultimately ended up having to back out. So I think that just says a lot about the integrity that you guys have. And that's something that, limited partners should look for in the GP team. So I definitely, commend you for that. And that's kind of why I wanted to bring it up and hear your side of the story there.
I
But
appreciate that. Again, like I said, it's like a fresh wound still
yeah,
because of time and money that we spend. But to your point, yes, we cannot put. I think that's the ultimate thing that we have our in terms of our governing principle for my company at MV Capital is you can lose your time, your money, but you cannot put investors' money at risk. Knowingly, right? What I'm saying is, yes, there will be unforeseen circumstances that might happen, and that's where your experience as an operator comes in to manage those unforeseen circumstances. But when you go into a position where you are into this deal and you know the risk going in, and you know that you're overpaying, that's putting your LP's money at risk, and that's one thing that you cannot do.
certainly. Yeah, no, that's a great point. I always like to kind of get into, I guess, more of the granular detail of, okay, we've identified we own a couple single families. We want to get into multifamily. We know the end goal, but what are some of the habits or things that you implemented on more of a short term basis that actually have allowed you to A, buy these assets and B, continue to scale?
I think the biggest one I would say is when I started out, I had that mindset, like coming from a single family, like I want to build my portfolio, I will build my assets. What I quickly realized is this is a team sport, right? So again, everybody in this business will tell you it's a team sport, and there's a reason behind it because as you expand your portfolio, go into multifamily, the number of uh, tasks that are associated with just acquisition and post acquisition into asset management, right? And then investor relationship and everything else. It's it's a lot of tasks. It's a lot more work. So you need partners to be able to complement your skill set. And you cannot do everything. You cannot be good at acquisition. You cannot be good along with asset management, along with investor relationships. So you need to partner up. So the first thing I think I learned was that I need to find good partners across different markets that are one have same set of principles in terms of what governs them. I think it's easy to find partners, but it's difficult to find partners that have same level of principle and are on the same thought process in terms of what asset classes that you're looking for, what's our strategy for different asset classes is across different markets. So that's one. And second, I think keep expanding your network, joining different masterminds, meeting other investors, going to different conferences. And I'll just do a plug here. I'm going to the MM6 again. So I'm part of Jake and Gino's network like you are. And I've met two partners and actually three LPs in my last MM5 as well. So just going through these different conferences. And again, you have limited time, so you have to make sure that you're attending the right conferences and going to the right meetups as well. So yeah, that's one thing I'm focusing on more in terms of shifting my mindset. And we build good partnership across different markets as well. I have different partners across North Carolina. We have uh, started like we have done two deals with one of my partner Mariana in Ohio market. So we're working closely now in expanding our portfolio in Tennessee market as well as part of the Double Empire company that we established.
Awesome. Yeah, that's the network, and then aligning the partners with the values is huge. And that's something I can personally say we didn't do the greatest job on at first. And we're in some partnerships now that we, not going to say regret. We learned our lesson and we're thankful for it, but we have started to implement traction. I'm not sure if that's something that you guys utilize as well. I know there's some other operators that kind of specifically work with people that do align with the 5 to 7 core values that they've identified. And if they don't, it's, hey, sorry, love to stay in touch with you, but at this time, we're not going to be a good fit. So I think
Right.
to actually have those down on paper has been big for us to, hey, we can make decisions off of these principles now. But,
That's a great point. So again, I'm the one being interviewed, but I learned a good part from you. Like that's a great point. I didn't think about putting this on paper. So far, it is more about what I have in my brain in terms of what are key principles in terms of working closely with investors or even with your own assets as well. And more importantly, how do you want to treat tenants? How do you want to manage your properties? Those kind of aspects. But putting it down on paper, that's a good idea. I should do that, Kevin. So thanks, and I appreciate if you can share that as well.
yeah, absolutely. Now I'm curious what, your long-term outlook as a business looks like, and then maybe some of the things that you're implementing as midterm goals to achieve that are right now.
Yeah, so long term, I think what we are trying to build, like I said, is expanding our partnership and for our foothold across the certain market that we have established already, our experience. One thing I realized also is it's easier to expand in certain market if you have built a relationship with property managers, with with general contractors. So that's what we're trying to do. We have good foothold in Cleveland, Columbus, and certain other Midwest markets, and we're trying to expand that in a driving distance of Tennessee markets as well. Similarly, in North Carolina, we're trying to expand our footprint into Fayetteville, Raleigh, Charlotte markets also, because that's where we have our existing presence as well. Uh, so I think one aspect, what we are focusing on, how we can expand our portfolio in the existing market where we have existing relationships. And second, continue to bring education to our investors. So I'm in Philadelphia, but I don't invest in Pennsylvania so far. But we are building our investor base here in Pennsylvania for people who wants to invest out of state as well. So we are continuing to expand our education series with our investors. We trying to set up like a recurring monthly meetups here locally in Philadelphia market also. So if anybody who's wants to reach out, certainly can reach out, and we are trying to make it a more of a priority for us so we can build a good investor base here and locally around New Jersey, New York, Pennsylvania area.
Awesome. Yeah, that's the network really is huge, and every day it seems like it's you want to think it's the what you do and the what and it ends up being the one person that can connect the three dots that you couldn't have done on your own, which is a very humbling thing. So yeah, can't harp on the network aspect enough. But I'm
And
I'm curious.
Yeah,
Yeah.
one other thing I totally forgot, but we are like apart from the multifamily is our core business and it's still gonna be, but we are trying to expand and learn a little bit more into the senior assisted living as well. So that's another aspect that we are trying to build our not build but start our portfolio in, where we haven't done so far. So that's another space where we're trying to expand our footprint.
I think I've got something outside of Columbus we've got to underwrite after this.
Yeah, there you go, Kevin. Maybe we couldn't make it work in Columbus multifamily, but we'll still be able to do senior assisted living.
Yeah,
Yeah,
that's
there you go.
awesome. So I'm curious from the single families, multifamilies, is there anything that you would do differently if you could start over, or advice you would give to someone just starting out, a lesson that you've learned?
I think what it comes down to is, yes, so I used to think I need to match up to certain people, like in terms of what they are doing and how they're doing it. What I learned quickly is every person has their own journey in terms of what their drivers are, right? Certain people, they want to invest passively because they like their job. They don't want to retire as early. Like they like working, right? Some people they want to invest passively, but soon want to make it a full-time transition. So the journey is going to be totally different in those aspects. Similarly, for passive investors, some people are more inclined towards getting tax benefits. Some people are more inclined towards getting returns. So what I would do differently is actually understand what my drivers were 2 years back and could have made the jump maybe a little earlier in the multifamily space, understanding that multifamily space actually fits really well to what I'm trying to get out of the real estate journey that I'm trying to build, or real estate business that I'm trying to build. So that's the only aspect I would say, but that's for me only, right? I cannot say that's your or people who are listening to the podcast. That's what they should do as well. What I would say is for them to understand what they really want out of what they're trying to invest in real estate or any other business, and as they try to diversify or invest whatever their drivers are, and make and connect with people who have gone through those aspects and are in a better in the state that they're trying to get to, because then you can learn from what mistakes that they did and maybe get it a quicker path. And that's one of the reasons that we go into these masterminds and different groups as well, so we can learn from other people's mistakes. I mean, we're going to follow our own path, and instead of taking 5 years, we might be able to get it done in 2 to 3 years.
Absolutely, yeah. Expedite the learning curve and hopefully miss out on some of the hard lessons.
That's that. Leverage from other people's mistakes so you don't have to repeat those mistakes, right?
Certainly. So I know you've got assets in a couple different markets, and you already hit on Midwest being the cash flow market for you guys. Beyond having partners and resources in the markets, what are some of the interesting drivers that you guys have for the Midwest specifically?
In terms of growth, you mean?
Yeah, just is there anything besides the kind of cash flow and steadiness, or what, how do you identify markets, maybe some of the drivers that you guys
Oh,
look
some of
for?
the drivers. Yeah, absolutely. I think one is certainly the population growth that we are seeing across well, very few areas that you can find an actual population growth. But we still try to look for those. And second, um, what we look for is even if the population growth is not there, how steady the population is. That's minimum. And then we also look for a good school district. I mean, that's one of the things that we have seen in our portfolio. People will pay really well to be part of a good school district, even if it's a secondary or tertiary market, right? As long as it's a good school district, that has been a good driving factor for most of our growth in the secondary markets as well.
That's a great point, and that's, yeah, something we've learned even from flipping single family homes is we can be almost in the same neighborhood, but one's a different school district, and you've got a premium there. So
Yeah,
that's definitely, I think, the main ones being the population, crime, and then median income. But people
right,
often overlook that school district aspect, which that could be a big decision maker for, hey, can we actually push rents to this amount?
right.
So that's
And I didn't say crime specifically because you can't really get that information directly from brokers and others, but yes, we have that built in our portfolio. We have different uh, I would say programs that we have paid programs that we get crime data. So that's built into our area search when we go into properties that we are interested in or not. The other last piece I would say, like in terms of asset classes, what we have seen, especially in multifamily, if you can. and this is what our focus is now, is to find townhome style rental apartments, not the apartments, but townhome style rental units. That asset class, I would say, is going to continue to have more demand. And you can see it all across the market. Like I was recently in Charlotte market, and there's a great more inventory of, I think there are like 30,000 apartments being built, Class A apartments being built, but very few townhome styles. So I think that asset class is a little bit underserved in terms of the supply, and but the demand is increasing really fast for townhome style units as well. So yeah, that's where we're building our relationship with brokers, wholesalers across Midwest, North Carolina market, including South Carolina and Tennessee as well. We are really focusing on townhome style units, anywhere from 10 unit all the way to 100 plus units as well.
Interesting. Yeah, that's a great point, and we do see a premium in the townhomes that we own versus more of kind of the single story or cardinal style buildings, where it's. I think the townhomes feel a little bit less like an apartment and more like a home, hence the
Right.
name. So I
Yeah,
think
absolutely.
you get a little bit more of a premium there, and the desirability is certainly there. And especially if you're saying the supply is not quite there as well, then that's a great driver. So
Right.
that's awesome. Well, I really appreciate you coming on here, and I'm sure there's some good takeaways from the LP and GP side for the listeners. Where can people connect with you? I'll put these in the notes as well for the episode. But what's the best way
Yeah,
to learn more about your
sure.
company?
People can go to my website, www.nvcapitalgroup.org, or they can look for me on Facebook, Mohit Chopra. I'll send you my link on Facebook as well. You can put it on the interview.
Awesome. I certainly will. Well, it was a pleasure, and I appreciate you making time to come on.
Thank you, Kevin. Good chatting with you as well. Thanks.
Absolutely.